All right, let's just do another quick sound check. Sorry about that, guys. Gotta love going live. I think everybody should be able to hear me loud and clear now, so we should be ready to go. Hey, Mo, just let me know if you can hear me okay. I think we got those technical difficulties sorted out. Oh, thank you so much for those of you who are chatting in. See, that's why your feedback is so important. Make sure that things are, running according to the way that they should be. But hey, what is technology without a few technical difficulties to work through? So we're going to go ahead and dive on into our session today. We got that, technical difficulty out of the way pretty quickly here. So thank you so much for joining us today in our session, where we're really going to be focusing on ways to trade in choppy markets, really how to survive in choppy markets, because let's face it, it can feel like survival at times. So what does your survival kit include? Well, really it should include at least 3 main things, and we're going to walk through sort of a 5-step strategy and approach for you guys to all take away from this session. But the first three things that I want you to focus on through today's session is just acceptance. 1, accept that the markets are choppy. It is what it is. No amount of hoping or wishing is going to change the market condition, all right? So acceptance of the market condition, and accept that traditional trend strategies may be handicapped in these scenarios. So that brings us to our next point, which is you may need to switch it up. If your traditional trend following type strategies are no longer really lucrative in these types of choppy markets, then switch it up. What are you switching up in your trade strategy? Are you switching up your timing? There's lots of levers you can pull there as a trader, but again, understanding and accepting the markets are choppy, and then knowing that it may require a change up, if you will. And then, of course, the third is going to be cut your risk. All right, now, what does risk minimization look like for you? You might cut your position size. You may even cut your timing, and you may need to cut your expectations of the trend as well. And so understanding those market conditions going into the trade will really help to make you a more informed and hopefully a more profitable trader regardless of the market condition. So let's go ahead and dive on into the VantagePoint software, and we'll go ahead and just we'll take a look and we'll dive right into those choppy markets, won't we? So let's just go ahead and get that pulled on up here. All right, so welcome guys to the live stream. If you're just joining, sorry about the sound here in the beginning, but we got that all sorted out. So just give me a quick thumbs up if you can hear me and see my screen, and we'll certainly be on our way. I love feedback during the sessions. That always helps me to make sure that I'm answering your questions, and I always keep an eye on the comments section throughout the entire session, because truly your questions are why we're here. We strive to be a resource. So of course, anytime that we dive into, VantagePoint in our simulated environment, this is an educational experience for everyone, not just VantagePoint family members, but these concepts and these, strategic approaches are really something anyone can take away and implement into their own strategies. And so thank you very much for everyone joining today. Perfect, Kevin. Much appreciated. And do me a favor too, while you're over there, go ahead and hit like and subscribe. Certainly want to make sure that you come back for more education here within the markets and really understanding how AI can make a huge difference in your trading. So let's take a look at that artificial intelligence at work here. Now we've got the diamonds pulled up. This is the ETF that follows the Dow. So it's not, diamonds, the actual commodity, but diamonds is going to be a really big precursor for what to expect in the markets ahead of time. And what I mean by that is understanding what conditions are coming up. Now, the artificial intelligence in VantagePoint is going to tell you that ahead of time, so you can really assess these market conditions and plan and prepare for maybe an adjustment in strategy or an adjustment in expectation or an adjustment in risk. But assessing these major markets like the Dow, the NASDAQ, or the SPY are really going to help you see, okay, I need to accept that I'm trading within choppy or volatile markets. And as long as you know that, then you're well informed getting into whatever trade it is that you're putting on. So let's jump on in for a quick assessment. Now, before we get to the kind of choppy market segment here, I just want to make sure for anyone who is not yet a VantagePoint family member, in fact, do I have anyone in the session today that is not already a VantagePoint family member? Just raise your hand, or just let me know some way in the chat, say I'm not with VP yet, or something to signify that, hey, I haven't actually started using the software yet, because I want to make sure that everybody's on the same page. If you already have VantagePoint, then you know how to use it with the 4 points of confirmation, but always good to give a quick double check. All right, most of you are, but let's go ahead. I'm just going to go ahead and take a look at a little less chop of a market here, and we can see a nice trending market. And again, accepting what conditions you're under is going to be key. Now in Yelp here, we just have this as an example. You can see this is a nice trending market. We have a potential bullish reversal here coming up, and finding these opportunities is still possible even within choppy markets. So this was one reason I wanted to bring this up, and we're going to touch on that a little bit more later in the session. But first, let's make sure everybody understands how to read the VantagePoint key indicators here, these key predictive and leading indicators in the market using the AI. So just remember 4 things, okay? It's really that simple. Let me get my pen out so we can walk through those 4 things together. The first one is a crossover. So our first piece of information we're going to be looking for is that VantagePoint crossover, where we get a blue line, which is a predictive moving average, crossing above the black line. Our trend's going to turn green, and well, in VantagePoint, green means up, red means down typically. So we see the trend turn green. That would indicate the potential bullishness or uptrend that's expected. Now the next is going to be the price action. That's going to come to our neural index down here. That's that red and green banner that runs across the screen. That neural index is going to give you that indication of price action over the next 2 days. So when we see green down here in the neural index, we're going to really expect price to move up over the next 2 days. So we have the trend, the price action, and now we're going to move on down to momentum. Momentum is going to be given by the predictive differences. Yes, these are predictive momentum indicators that really measure the strength of the predictive trend. And so looking at our momentum indicators, you can see at our crossover, we had all 3 of our predictive momentum indicators, those predictive differences, signaling a bullish expectation or bullish strength coming into that trend. Now, there are 3 because we do have 3 different time frames, a 1-day, a 2-day, and a 3-day. Remember that it's going to make a difference when we start talking about adjustments to time frames. Time frames are a key piece that you can adjust in choppier markets. So again, just sort of setting you guys up for success as we go over some advantages in choppy markets, so you can still be profitable regardless of how the market is trading. So here's our predictive differences, and that's going to give us momentum, confirming at this point our trend and our price action. And then fourth is going to be that predictive trade candle. Your predictive trade candle with it green on both ends is going to signal that we expect to see a higher high as well as a higher low, which means price action essentially moving up over the next 1 day. This is a 1-day indicator of price range. Where do we expect price to flow throughout the day with an expected or a predictive low value and a predictive high value? If we hover over those values, you can see, or that indicator, you can see those values, the predicted high at 2340 with a midpoint at 2276 and then a predicted low at 2212. So if you want to talk about timing your entries and setting stops, this is a great indicator to use for that. So more, of course, on that to come as well. Now, That's our 4 points of confirmation. So kind of jot that down, if you will. You're going to want to make sure that you have those 4 points of confirmation. If these points aren't confirming each other, then, well, you're sort of setting yourself up into a very risky scenario that you may want to avoid. So throughout our session today, we're going to look for these 4 points of confirmation. If we don't have it, then hey, maybe the trade setup isn't there, and it may be advantageous to go find another opportunity. Any questions on really what to look at for a bullish trend expectation here? And again, we can use these on different time frames, so that's what we're going to get to here very shortly. Now, if you guys understand the upside, we're going to switch it up to the downside, and this is a great chart because then we can see the downside that happened previously back in January on Yelp. So if we take a look at January, we see where the blue line crosses below the black line. So that trend actually turns red. When the trend turns red, it's an indication that there may be a shift in that trend, and we should go look at our other points of confirmation to see if they're in alignment. So with that first point of confirmation in a bearish expectation, look down to the neural index. It's also red, confirming that bearishness. And then take a look at those predictive differences to make sure that yes, we do have bearish momentum starting to move into this trend. So we have 1, 2, 3 points of confirmation. We then would also check to make sure we had a lower high and a lower low to make sure that price action the next day was expected to move down as well. That would round out that 4 points of confirmation and really give us great confidence moving forward in either exiting that bullish position or moving into a potentially bearish position as well. So again, switching up the strategies when the trend changes. We're not doing anything different in choppy markets. We're changing up the position or changing up the strategy if choppy conditions come up. Would you say we've been in choppy market conditions? Guys, let me know in the comment section. How would you describe the current market conditions? I'd love to hear from you guys. So maybe in 1 or 2 words, just let me know how you would describe the current market conditions. I'd love to know. And maybe if you're talking about a specific market, let me know that too. You can type in the ticker symbol there as well. Hey, Philip, glad to have you in. Perfect. All right, very good. Yeah. So some of you are saying choppy, right? Like that's the perfect way to sort of describe what's happening right now. I love the honesty. Crazy, right? It can seem like a wild and crazy ride. That's for sure, Mo. Absolutely. Volatile, maybe is that another one that typically comes up when we see sort of this sort of whipsaw back and forth. That's another word to describe sort of the market conditions. And what that means is really you just have to look at the markets from a different perspective. You know, the same old strategy isn't going to work when the market conditions change. If you're not adaptable to the changing market conditions, then you're really setting yourself up to be behind the 8 ball. And that's not what VantagePoint is about. We want you to really see what's happening, and it is expected to happen ahead of time so that you can be a proactive trader versus a reactive trader. So 1, understand the market conditions. So let's jump back on over to the diamonds. I'm just going to jump over here because we do have some sort of whipsawing back and forth within the current market conditions. And hey, that's okay. The markets are going to do what the markets are going to do. Again, accept that. But we have to understand that those are the conditions you may likely find yourself trading in. All right. Same thing has happened on gold, on, oil. We could look at a lot of different markets. Take a look at even the dollar. Right? So I'm just going to jump on back to the diamonds here so we can focus on those major indices first. Now, when you're looking at sort of a sideways market, the first thing that I tend to think about is where are support and resistance levels. Now, we don't have any support and resistance here on the screen, but we do have the triple cross. Now, I'm going to explain the triple cross for those of you who are not familiar with the triple cross. The triple cross is actually 3 predictive moving averages on the same screen at the same time. And this can help to provide a level of support and resistance. I would call it a very dynamic level of support and resistance because as price adjusts, that level is going to adjust as well. So let's talk about that triple cross. All right, so the triple cross is actually a bit more of a conservative view of the trend. We can see that we have primarily green here within the trend, and even if we back this out to a little longer look, we can see that the triple cross provides a much more conservative view of the trend. It sort of gives the room for price to fluctuate without sort of that correction or major indication to the downside. And it's built like that for a reason. All right, there's a lot of information we can get out of the triple cross. Now, I mentioned there's 3 different predictive moving averages on the screen right here. So the first one is going to be that short term. We call it the T-cross short. Now, that's because it includes 1 day of predictive data in that line. And that's, in fact, the lighter blue line that in an uptrend really signifies the upper kind of range of that trend. And so that is a predictive exponential moving average that includes 1 day of predictive data. Now, the center line, or that T-cross medium, sits right there in the middle most of the time. That indicator is including 2 days of predictive price action. And then we have the T-cross long, which is the 3-day expectation. So it's a predictive exponential moving average that includes 3 days of predictive price. Now, for those of you who are wondering, it is an 18-day predictive exponential moving average, and we are going to talk a lot about this T-cross long level as well, because this is considered really a reversion point. So a point where price typically reverts back to. So we can use this as a level of support or resistance throughout the trend. If you'll notice at several points when price gets really far away from that T-cross long, like what we see right here back in December, it tends to revert all the way back down to that T-cross long level. Well, you can take advantage of that or take advantage of the dip and buy back in. So even in volatile markets where we see this whipsawing back and forth, you can use that T-cross long level to help guide your entries or guide your profit targets as well. Can I ask, who is setting profit targets? Can you tell me in the comments, does anyone set profit targets? If not, that might be a good place to start. Let me know in the comments, and I'm going to keep an eye on the chat as we go through. Okay, some of you are perfect. Okay, good. So the first piece is really deciding, should you take the trade at all? So if you don't have the potential profit target that you're looking for in the market, we talked about those 5 sort of key components of trading in choppy markets. The first is decide whether or not you're going to trade. So someone had commented, how do I know where to look? How do I know what market I should trade? How do I know where to set my profit target or my stop loss? Well, first decide, do you even want to trade that market? Or do you have enough confirmation to even trade that market? Sometimes the best trade that you take is the one that you didn't, right? And so understanding whether or not it's advantageous for you to even be in the markets right now, or if it's just a little too, to quote the comments, crazy for you to be trading at this point in time. That is a strategic trade decision. That is you deciding, hey, I want to protect my profits right now, as long as it's not coming from a place of fear. If it's a strategic decision that says, you know what, my strategies don't work under these conditions until I get a new one, or until I develop that strategy, I'm going to hold off because I don't want to put my capital at risk when I'm not sure how to manage that risk. That is a strategic trade decision. All right. So that's number 1, is decide whether or not you want to trade under these conditions. So let's take a look at the current conditions. I'm going to zoom in a little closer now that we've taken a look. we can see now that our triple cross is actually red. So this is really the larger overarching trend. Again, this is an indicator is a bit more conservative, right? Now, if we were to switch this to any time frame, you can see this is going to be bearish here. So we can see even currently it's bearish. This is the short term, so it's going to give you quicker signals. The medium term is going to be a bit more conservative, going to be a smoother line. You can see that medium term actually crossed over way back here mid-February and said, hey, we expect this trend to start shifting to the downside. Now, looking at the long-term crossover, you can see that this also is in a bearish state or bearish indication as well. So we're expecting bearishness, but again, in those volatile markets where we seem to see these very wild price swings, how do you navigate those conditions? And that's where profit targets and key points where price will likely revert back to, or key targets for price is going to be very important. One of those, again, is that T-cross long level. So if we see we are in a bearish trend right here, now you may see some bullishness coming from that predictive trade candle, but do we have those 4 points of confirmation, or are we still trending to the downside? Well, if we're in a bearish trend, you may want to think about some potentially bearish strategies. Do we have anyone? 2x ATR. I love it, Mo. Absolutely. Are you using the Keltner? Let me know in the comment section. I'd love to know if you're using the Keltner channel as well. Or does anyone use the Keltner channel? Yeah, Philip, that's a great point, right? You said, I'm not sure I would jump on that. Hey, that's fantastic. Then you made a decision, right? And we're not looking at the diamonds from a perspective of trading. I mean, you could, right? You could take a position on the diamonds, but we're actually using this to assess the market conditions. We know that things are choppy. We don't have full confirmation. If anything, we're more bearishly consolidated than anything. Now, some of you don't use Keltner. That's okay. Anyone using support and resistance? Have you heard of support and resistance? Let me know in the comments. If you know of support and resistance, how confident are you with support and resistance? I'm going to turn those on right now. Now, some of the indicators here in VantagePoint are optional. Everything we looked at this point is included in the software, but things like support and resistance can be added if you choose to. So you can see, in fact, that we're really trading within a pretty tight channel or sort of range-bound section of the market. If we were to put this on sort of the major areas of support and resistance, we can see that prices really stayed within this range for quite a long time. So it's important to understand that we are in this sort of range bound type trading mentality at this point, where the breakouts might not break out as far as they normally would, or as far as you would expect them to. And that's where we have to, again, adjust those expectations as well. So understanding that you're in choppy conditions is the first part of trading in choppy conditions, because now you know you may need to switch up, change your strategy up a little bit, if you will. So that shift in strategy has to come when the market conditions shift. So that's number two. If you are going to decide to trade in choppy conditions, you may need to shift your strategy to work under those conditions as well. Again, be adaptable, be fluid, be, able to trade under any condition. And that would be step number two. So let's take a look at some additional markets. In fact, do you guys have any markets that you guys want to take a look at? Maybe ones that you've been struggling with lately? While I wait on those, I'm going to go ahead and pull up MU, because we can take a look and see that Micron has actually been trending sideways for quite some time. Now, this is where I say, hey, the T-cross long level or that triple cross can give you a lot of insight into when we're starting to really come into those sort of channeling or range bound conditions here as well, where we just see up and down almost every single day. And so we really see Micron coming into this beginning of February, where we have this shift to the downside. And I'm just gonna highlight right here at the beginning of February. If we switch over to the short-term crossover, we in fact already had that short-term crossover. So shorter term expectations could work well under choppier conditions because things wouldn't expect to move. It's going to really move very quickly and then whipsaw back the other way very quickly. So if you know that you're coming into those types of conditions, then you may know how to trade it then. If you have a strategy for it, then you can execute that plan as well. So you can see on 2-3 that short-term crossover switches to the downside. Now, hey guys, take a look at this. I'm going to go ahead and plop on that triple cross for you. If you're using that triple cross as a potential profit target, then you could have had a fairly profitable move here to the downside. Or if you're looking for additional markets to trade, then you could go find another type of opportunity. If you don't trade short positions, you can use this same methodology as we see the bounce off of that T-cross long. So we're going to get to that in just a moment because that third piece is going to be shorten your expectations. You may need to shorten your time frame. So one, decide whether or not you're actually going to trade in these markets. If you are going to trade in a choppier market, then you will want to adjust or switch up your strategy for those conditions. And then thirdly, you may want to shorten your expectations. We talked a little bit about this earlier, but shorten up those profit targets, right? This profit may not go all the way down to a verified support or resistance level, right? It may not reach this support that we established back on the 14th of January. We may need some intermediate levels in between. Even things like Fibonacci levels work really well here also. But we're going to stick to our triple cross for today, keeping it fairly simple for everyone here. Again, using that triple cross or that T-cross long line as a potential profit target. Even if you entered in this day and just used that T-cross long as a profit target, I just put the crosshairs right down to that T-cross long level, and you still have a potential of 10.85% in just a couple of days. Again, shortening those expectations from a time frame as well as a profit target standpoint, knowing that, hey, we may not be able to accomplish or achieve that drawdown to support, but we can use a closer support level such as the T-cross long level as a fill-in for that in a shorter term expectation. Give me a thumbs up if you're seeing this, because we can do the same thing in a bounce, or we could also do the same thing in a bearish trend looking for a reversion back to the upside mean. So we'll take a look at some of those examples as well. Now let's take a look at the bounce. You can see price actions is staying right along that T-cross long level. Now, when we see price action staying right along that, I'm gonna try to use my pen. I don't know why it's not working, but you can see that we start to get momentum building back into this trend. And that's another piece, whether it's mean reversion or momentum moves, you can utilize those two types of scenarios or setups, if you will, in choppier conditions. And again, adjusting those expectations for maybe shorter time frames. And so as we see price action approaching a level of support, and in this case, we're going to use that T-cross long level, which we do establish a verified support level pretty soon after that. But as we see momentum starting to push back bullish after hitting that support level, any support level, whether you're using the T-cross long, or maybe it's a verified support level, or maybe it's a 4-hour time frame, regardless of the chart that you're using. All right, when a support level holds strong and we start to get renewed bullish momentum, that's typically when we will start to expect that bounce off of support, especially if we're already in an established bullish trend, which we are here. And so where would that potential profit target be? Maybe not way to the moon, right? If you're waiting for that, you may be waiting for a while, or you could get burned on the way there. So what can we do? Well, you might be able to expect a shorter term profit up to resistance, right? Now, if we take a look here, we can see that's a fairly decent profit. I don't know anybody that would complain about that, but let's go ahead and just patronize it, maybe just a little bit more even, to see what the profit potential could be here, even if we only came back up to hit this support line right here. So I'm just going to grab my line here and draw from here to shorter term profit target. Even that, you're up 8.52% in just a couple of days. So again, adjusting those shorter term expectations. Now we're not getting whipsawed back and forth because you're in and out very quickly, not allowing time for that whipsaw to occur. You're in, you're out, you're taking your profits and moving on to the next confirmed opportunity. I can't stress confirmed enough because you do want to be selective. You want to be selective about those opportunities, making sure that the setup is truly there so you know whether or not it's even worth the risk, if it's worth your time or enough bang for your buck, if you will. All right, so let's take a look. Any ticker symbols you guys want to take a look at, do me a favor, go ahead and type some of those in the comment section right now, and we'll go ahead and look some of those up. All right, so let me just remove some of this here. Now, you could also scan for these types of scenarios as well, especially in sort of continuous trends that may be tracking a bit more sideways, so consolidation. We could scan for these opportunities where we do have a potential bounce or a potential reversion back to that mean. So we're actually going to use two of our indicators here, two different types of crossovers. All right, so I'm actually just going to pinpoint a few pieces here. One, the triple cross, and two, we're also, if you're following along and you're already a VantagePoint user, we're going to use that short-term crossover. All right, so the short-term crossover. Hey, Carlene, glad to have you in. Oh, very good. I am fantastic. I hope you are as well. I'm so glad to have you in today. Perfect. All right, so let's take a look at some ticker symbols. Yeah, if you guys want to see that scan. Okay, so let's jump into this scan. I know most of you guys are like, just do a scan, show us how to find these opportunities, right? So if you guys want to see how to find these opportunities, let me know in the comment. I just want to know who's interested in seeing a scan. We're still going to do it regardless because most of you are already asking for it. But for those of you who haven't commented in yet, let's just set this up together. All right. So what we're looking at here in our scan is essentially the same exact indicator setup we're looking at down on the chart. We are just able to filter for these types of opportunities. So we're going to let VantagePoint and its artificial intelligence do all of the heavy lifting, all of that work for us. But you still have to say, hey, IntelliScan, I want X type of opportunities. I want bounce type of opportunities. And that's what we're going to set up right now. So we said we're going to use that short-term crossover. You can see that's our most sensitive crossover. That's in VantagePoint. It's that 1 day expectation. So when we get that short-term crossover, here we can see that potential bounce. When we get that short-term crossover right here, after hitting support, we see that bounce to the upside. So those are the things we're going to be looking for in this type of scan. And this is a great way to find either reversion back to the mean or opportunities for that bounce and that shorter term breakout as we bounce off of support. So that's what we're going to focus on right now, is that bounce. So we're going to set that short term crossover direction to up. Super simple. Just say, hey, I want that short term crossover going up. If we look at this scenario right here where we're coming out of that consolidation, we have a potential bounce to the upside off of support, and that short term crossover has just showed up. All right, so first day signal on the short-term crossover, so we want that equal to 1. Now we're going to jump all the way over to the triple cross. We said we're going to use the triple cross to find those established trends. So we're looking for a trend that's been in one direction for a while. Now it could be consolidating, and that's okay because we're looking for that shorter-term expectation for the execution point. The triple cross is just being used to identify the type of trend, either an uptrend or a downtrend. All right, so we're going to look for the triple cross as up, and then of course we do want more things in our favor to the upside for a bounce, so we're going to put those short-term predictive differences to the upside as well. Everything to the up, and predictive trading range up as well. You could also filter by close price and volume if you want. This is also going to be a key factor. So I'm going to go ahead and filter on volume. Now, whenever we've got really choppy markets, volume can be another qualifying factor. Again, I mentioned be selective about your opportunities. That's sort of step number 4, if you will. So with that selection process, we can really identify highly liquid markets that you can get into and out of very easily. All right, you're not going to get stuck in that position. I like to start with a threshold or just sort of a baseline of 1 million or more in trade volume per day, but you can also increase this to maybe 3 million or 5 million, if you will. You might also decrease it, but again, in choppier markets, you want more volume also. Now, you could, in addition to that, put in the volume percent average. I don't know if anybody has heard of that, but volume percent average is going to tell us, okay, do we see more volume than usual? All right. And typically when a market's getting ready to move for that, sort of bounce or that quick momentum breakout, you see increased volume. So we would want the volume percent average to be above normal. And normal in this case would be a threshold of 0. So we could just simply set that to greater than or equal to 0. And that would give us that increase in volume for additional confirmation here. Okay. So let's take a look at what we get. So I'm just going to grab all of our markets here. I'm going to go ahead and drop our stocks in. You know what? I'm going to go ahead and drop in our ETFs too, because there's a lot of inverse ETFs that can also move pretty strongly during certain conditions like this. So if you're familiar with inverse ETFs, these are going to be markets that typically move opposite of their parent market, if you will, or their main market. And so for example, when, the Qs are going down, there's inverse ETFs that follow the Qs, but they go up. And so even if you don't trade to the downside, you can still find opportunities to the upside in some of those as well. So let's take a look. We've got lots of opportunities here, just kind of really identified within the IntelliScan 14 potential opportunities. All right, so let's go ahead and just make sure that we're in a nice strong uptrend. So I'm going to filter by the number of days in that triple cross to be stack ranked from highest to lowest, meaning we're in these uptrends for quite some time, and there's a likelihood of a potential reversion back to the mean, right? We want to give price a little bit of room, a little bit of time to sort of overextend or tire itself out. So if you want to further narrow this down, you could look for things greater than 10, maybe even 18 if you're looking for a stronger trend here. But I think this narrows things down pretty well for us across the board. So let's take a look at something here where we've had an uptrend for 53 days, but we've just really had that first crossover on the short term back to the upside. So we'll take a look and see what this looks like. We'll take a look at OKE because I know a lot of you always ask for OKE anyway, so we're going to jump on into both of those today. Aha, look at that. So we're talking about those whipsaws, right? Especially in current market conditions. Well, hey, take advantage of them. If you know they're coming, then you can prepare and plan for them. And if you can prepare and plan, you can probably be profitable. All right. So as long as you stick to your plan. So I'm going to switch on over to that short-term crossover. So the first thing I want to know is, do we have a short-term crossover with our 4 points of confirmation? Don't forget step number 4, we're being very selective. We want to make sure that we're selective on these. So 1, are you going to trade under the current conditions? 2, what strategy adjustments are you going to make under the current conditions? 3, we're going to now start to assess those shorter term profit targets and shorter term timeframes. This is going to be done on the chart. All right. So now we see that short-term crossover, and we're coming to that sort of selective process, which is step number 4 as well. So we have that short-term crossover to the upside. We've got that green neural index. We've got our predictive differences all moving to the upside, and we have that predictive trading range. We do have that confirmation. Now, our profit target, right? Now we need to look at where we would expect price to move. If it only moved to the next key target level, would you be happy with that profit? Is that sort of enough for you to put your hard-earned money at risk. And so one key piece that you could look at is resistance. We talked about that T-cross long level, but I'm also going to use resistance here because we can see we have a very near resistance level at this point. So we can see with this crossover here, moving on up to that potential resistance level, is that enough of a movement for you if you are trading this market? That's an individual trade type strategy. That's going to be based on your risk tolerances, your setup, right? So no one can tell you that, but if it's enough bang for your buck, then hey, you found an opportunity that has the 4 points of confirmation. You're being selective, you're shortening that time frame and that expectation there as well. Now, let's move on to the sort of kind of final phase as well, which is then adapting your position management. So initial profit target potentially at a closer level of resistance or support, whichever way you're trading it. But then if price were to break through that level, then and only then might you add to the position. We're only adding to the position if it's going in your favor, right? Because in choppy market conditions, if you're wrong, you kind of want to know you're wrong right away so you can minimize those losses. How many of you, and be honest, all right? Be honest in the comment section because this is going to help somebody else, all right? Have you stayed in too long thinking, oh my gosh, this is going to come back, right? Now, I know the answer to that question because I see many of you on these sessions and I've worked with many of you guys one-on-one as well. So I know the answer to that, but I want you guys to be honest. Let everybody out there know that, hey, that's something that has happened. You've learned from that mistake and hopefully you are now avoiding making that mistake again by following these key steps in choppy markets, is taking that profit. And if things can continue in your favor, then maybe you add to that position, because remember, you may also be cutting risk in the beginning, meaning you might be cutting your position size. Now, that doesn't mean that if this goes in your favor, you couldn't add to that position size. So as risk decreases, you may increase your position size. That's proper position management, making sure that risk and the management efforts go hand in hand, that they're really proportionate. All right, so that's a key piece in any strategy, whether it's a trending market or whether you're trading under choppy conditions here as well. So he said, yep, absolutely. Okay, well, if you're trading options, this is a great question, Spencer. If you're trading options, you're really relying on the movement of the underlying asset, right? And that's exactly what we're taking advantage of here. So you might do a shorter term option. Maybe it's weekly. Maybe you're using the monthly expiration, but you're okay getting out early. I don't know. Maybe you're even using doing like a 0 DTE strategy. If that's the case, then you would really want to focus on that predictive trade candle as well. So when you look at the predictive trade candle, you can see that predicted high and low. And if you're not sure where to find that information, look on over to the left-hand side of your screen. I'm kind of circling it with my mouse here. You can see the P high, the P mid, and the P low range sitting right there for you. So with that, you may decide that, you want to take a shorter term option, and that's okay. Again, it's still the movement in the underlying asset that really makes that option profitable, right? You're betting on that movement in order for that option to be profitable. And so if you were to enter in somewhere sort of towards the lower range of the predictive trade candle, then that would be your potential entry, right? If you're looking for a down or move to the downside, you would be looking at entering in at the upper range of that predictive trade candle as well, right? So if the price opens, if the price of the asset opens in the upper range of the predictive trade candle, then you may expect it to fall during the day and come down and possibly hit or maybe even just jump slightly past that predictive low. And I think that's exactly what happened with OKE today. It started up at the upper part of the predictive trade candle. There we go, a little tongue tied there, and then fell throughout the day. Well, that's because we would expect price to stay within that price range. All right, so we're not just looking at this from a directional standpoint, but we're also assessing strategically where would be the best potential entry. And depending upon where price opens, where this market opens, that can tell you a lot about what's going to happen for the day, especially if you have these predictive values. So if you now know using VantagePoint that we're already at the predicted high at the beginning of the day, the likelihood to come back and fill that predicted low is pretty high, and our accuracy on that is pretty darn incredible. So that is one way to identify and utilize options on a shorter time frame as well, or day trading too. You could also use that for day trading. So lots of different ways to use that predictive trade candle. Yeah, hopefully that answers your question there. All right, so let's take a look at some others here as well. Let's see. Just gonna pull this down a bit. Oh, you know what? We didn't go over SLGN, so that's probably pretty important. Does anyone trade spreads here? Because this is another type of opportunity you could utilize in types of market conditions like this, is utilizing potential spread opportunities, option spreads. Anyone in here doing that? Let me know in the comment section. All right, perfect. I'll take a look. Looks like some of you might be chatting in, but we'll take a look, because here we have just a really consolidation right here. So again, decide, are you going to trade this at all with very little movement and very little volatility here? Are you looking at potentially trading this market? That's up to you, right? We do have increased volume, right? So another way to look at this is, okay, will we have more volatility? You could use something like Bollinger Bands. We won't go into that today because we're almost out of time here, but you could use a volatility indicator like Bollinger Bands. I mentioned the Keltner channel as well, but you can see that we do have the points of confirmation. I'm just going to pull this up a little bit so you guys can see it. But we do have our neural index, our predictive differences, all moving to the upside as well. So then take a look and say, okay, well, where is that next level of maybe resistance? So let's take a look at resistance. Is there enough room to run before you hit that level of resistance? If you enter in somewhere at the bottom of the predictive trade candle, just coming up to that resistance level right there, is that enough for you as a trader? If 1.38% in one day isn't enough, then hey, again, maybe you choose to not trade that market. That brings us right on back to step number one, right? And this market was slightly up today at 47.50. So, okay, let's move on to some others. Let me see. Yeah, it's up about $1.20 today. That's okay. If you don't know anything about options, you can just trade the individual asset, just buy and sell. Some of you are doing iron condors. Yes, Carlene, very familiar with your strategies, so fantastic. All right, Netflix. Yeah, we can look at Netflix. But this is an example of those sort of pullback opportunities where we've had something revert back to the mean. Let's take a look at FLNG. I'm curious to see what energy is doing, right? We can take a look at some technology, Ascendus Pharma. Let's look at CCJ too, some basic materials here. All right, so as we jump on in, you can see that, sorry, I'm just trying to get my chat back up here. Perfect. All right, so coming on back, let's take a look at some of these here where we have, again, those whipsawing conditions, but as we start to bounce off of support, do we really see that shift, that shorter term shift on the short term crossover? And we do have that crossover to the upside and potential movement back into the uptrend, right? So this is a great way to identify those areas in the market where we've already seen the reversion back again, just avoiding that whipsaw, but taking advantage of the bounce back up, right? So again, this is, I mean, pretty self-explanatory, but any questions on this sort of bounce type scan? You could also add in support into the scan as well if you have support in the software. If not, then hey, you can use the T-cross long level as well. Watch this. If we put on the T-cross long level, you guys are going to see this. See how we bounced right back down to that T-cross long level here. This is the opportunity we were pinpointing here. Bounce right back down to the T-cross long level. And instead of getting whipsawed right here, you're taking advantage of the movement, using that as an execution point to ride that next shorter term breakout under choppier conditions. Now, if you want to look for a short term crossover with the triple cross down, then you could use the T cross long as your profit target as well. So I'm actually going to switch that medium term crossover to down, down. Let's see. We may not have too many of these. There we go. Let's look for those bearish conditions. Let me just remove these. There we go. Let's look to the downside. So looking to the downside, triple cross, right, is in that down state. Actually, let's change this to, oops, there we go, wrong one. Down, down, down. Actually, there we go. All right. So if we look for potential opportunities where we have the shorter term, oh my gosh, sorry guys, there we go. Down, 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 down. That's what we were looking for, right? Down, down, down. All right, so let's take a look at some of these. Let's take a look at Ford, right? Some of these just more well-known assets, if you will. If you're looking for bearish positions as well. And here we go. So even in that consolidation, look, you can see when the predictive differences really start to show that breakout, that steeper move, that can really give you a signal that, hey, things are really starting to shift. And again, we have that volume above average. So there's higher than usual volume or activity on that asset as well. That's going to be another key indication there that can really help you better understand what's happening at that point in time, so you can decide whether or not you want to take that opportunity. Coming out of consolidation, breakouts like this can be, again, very lucrative, but you also have to understand, okay, where is my profit target? Shorten up those profit targets. Maybe it's a one-time ATR. Maybe it's a 2 times ATR. You could use your Keltner channel for that. Maybe it's a standard deviation like the Bollinger Bands, or maybe it's a support and resistance level, or even the predictive T-cross long level right there. So plenty of opportunities in the markets, as long as you are really following a trade strategy, or not even a trade strategy, right? You have to have a strategy, of course, but as long as you are following those guidelines. So what are we doing first, right? We're deciding if you should even trade in the markets. That's step number 1, right? Then the next is that shift in strategy. How are you going to adjust your strategy if you decide to trade in those current market conditions? And then, of course, adjust that trading risk. You're going to want to make sure that you might be adjusting your time frames. Again, cut your profits. Cut your profit targets, right? Cut your maybe position size and cut your time frames. So you want to manage that risk much more closely under choppier conditions, just because there is more risk there. Then of course you're going to want to avoid those whipsaws. Avoid them, but take advantage of them as well. Understand those market conditions are going to be a bit more volatile, so your entry timing and your entry pricing is going to be even more important during those key pieces. And then really consider maybe adding to the position if it goes in your favor, but if it doesn't, just know that you're wrong right away. So you want to be able to adapt and adjust as those conditions occur, because volatile markets can move very quickly, so you want to be prepared for that. Be prepared to take action very quickly. So that pretty much rounds out our session for today, guys. If you need additional information, as always, just go to VantagePointForecast.com. We have plenty of information for all of you guys out there as well. If you enjoyed the session today, please do me a favor. Just go ahead and hit the thumbs up button. That just helps us to make sure that we're continuing to bring relevant content to you guys So that way you can take these small pieces or nuggets of information into your own day-to-day trade strategies and assessments of the market. So if you found one piece of information that's going to help you trade under current conditions or future conditions, just go ahead and hit that thumbs up for me as well. Appreciate all of you guys taking the time to be here with us today. I hope you guys have a great rest of your week, and happy trading all.